win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. And let's get right into the charts for this Asian session. Bada bing, bada boom, here we go. So it looks like the daily candle closed off that 618 rejection, which also happens to be a daily resistance level. Previous support becomes resistance as you break down through it. We did try to reclaim some of these daily support and resistance levels. That's what these yellow dotted lines are. So we are above this one down here for that 29119 region until we break beneath it. We put out this daily fib retrace level golden pocket region. We did get the previous day sell-off wick, which we did enter a short on just a few minutes before last time's live stream, and we locked in the gains on that. And yeah, so we are in another short right now, currently underwater, It is underwater by $81, 3% of a little mini baby short. It went up to $200 profit, but I'm expecting a slight pullback due to the liquidity, but that's just me. We'll see what's going on in a bit, whether I should get out of this or not. We'll analyze this some more. So let's take a look. So we got that daily close level right off the 618, and it's currently going beneath that level. I'm just not seeing the volume step up to the plate here. This is a PVSRA strategy of the colored candles here. The previous day did have some wick whacking and a lot of volume was inside that candle, but in this candle just not so much, which could suggest something similar to this one where we rose up in order to go back down to retrace, or in this case too where we rose up in order to go back down into retrace. So could we go higher and do an extended M before we come back to retrace, or is it going to be a shallow M? Who knows? Let's go into the liquidity on this high block capital, which is $70 a month. What is this? It's when people leave their liquidity into the charts to be burnt to a crisp by the market maker by not using a stop loss. So let's see who got crispy today. So this was it looks like almost like I don't know, electric current with how these lines are getting cut so frequently. So the last time we went live, we put out these bubbles getting destroyed, and they came back with a fury into these bubbles, and then just after we went off stream, they came back into this liquidity with a fury, and then immediately came back into this liquidity with the fury. And currently, let me refresh this, as we stand, there was a lot of wick whacking. So as it stands currently, we are at 11 billion imbalance in long liquidity, and you do have this stacked up region just above here in shorts up to the 30k region, but it's 25x characters, and you do have 100x pools in sparse supply up here, and a 50x character up here. So there it is. The bands are thick, the noodles are thick to the upside here to be slurped, possibly up to 30,400. However, the imbalance currently is to the long, so let's go look in detail at these bubbles that opened up here that are currently in profit. Okay, so a bunch was induced here on this candle here to the upside, and then they retraced back down into it, ate the 100x here, and the 50x at 181 million got by the skin of their teeth, and they are still in profit. And this $181 million pool at 50x is still on the table, as is his partner in crime here at 29,166, who is now in drawdown hell because they are opened it up here, and they are now coming down into this liquidation point of this $150 million character at 50x. Also, there is a 25x 124 million bubble and a 152 million down here at 25x, and this 181 million at 28.2. So that's on the immediate 1 minute time frame. You see a lot of long liquidity still in the charts even after this dip to the downside, taking out all of these guys. There's still all of these guys on the table. On the 1 minute time frame, the imbalance is to the downside. Let's expand our vision to the higher time frame. By the way, consider subscribing and liking the video if you haven't already, and yeah, that helps even ever so slightly. Let's go. So we skip the 12-hour and go to the 7-day. So the 7-day still has some liquidity up above here. If you just zoom in and forget everything but just where we are right now. In the immediate price action location, there is a few billion down here at 29.1. Sometimes I do this and then it comes to fruition. So just the most immediate near the price is this $1 billion, and then beyond that you have some up here at 30,000, so or 30,100. So on this 7-day time frame, to go down to go up to here seems to be that equation here. However, as you look down below here, sub 27, you do have some thicker regions in liquidity, about 20 billion or so by the looks of it, outweighing the price tag to 30k. Do they go up to 30k, stop out all these guys before dropping it like a rock like they did here? Why did they stop it here and bring it back up is the question. Indeed. Let's go to the 1 month and see. How's everyone doing out there? Oh yes.
Fatality.
Yes, that's what happens when you over leverage. You get knocked to high heaven with these bubbles getting popped. So let's go see what here. So here's where, back here when we were getting the cross downs on Sunday with the 12 and the 22 hour, and we saw that idea for the short, it was just the imbalance of the liquidity down below was the idea. However, as we start to see, some of this is getting caked up to the path to 34k. Somebody was pointing out the CME gap down at 22k and the CME gap up at 35k. So it's like, which CME gap gets filled first? Is it going down to 22 to go up to 34, or going to 34 to go down to 22? That is the question on everyone's mind, isn't it? So just looking at the monthly, 3-month and 6-month time frame, you start to see that there's a possibility that these pools are under attack right now and getting into this, below this region. If you do start making lower lows, then these 25k possible knockouts do come into the picture, and 22k does have about $200 billion down there, and you have a 100 billion in this 25k region, and the entire path there is paved quite nicely. The path paved to 34k is just not there yet in my mind on this time frame. So if you look up here, we do have 24 billion in the immediate up here at 30,200. So 30,200 could be tapped ever so slightly, knock out these guys, or even go up to get the 41 billion. However, this has happened before where they just leave it on the table. So they leave, a good 50 billion on the table to retrace into some of the liquidity on the higher time frames and to dupe out some of the other 100x, and they let it percolate a bit. So they let this, I remember talking about this back here, the 25.6 region, when they left this on the higher time frame, they left about 170 billion on the table. We'll get there as we go to the 6-month and above. So it's an interesting beast to juxtapose these time frames and go from internal to external liquidity and try to keep heads and tails over where the pools lie and where the imbalances lie in the charts. So as you see on this 6-month, it's a little bit imbalanced to the downside as well. You have these thick bands of 86 billion down at 13k, and all of these characters are getting paid, mind you. They're in profit. So a lot of these retraces are to stop them out, similar to a bull bucking you off them from riding them. They're trying to buck off the longs from continuing in their trade as they take it up. And same with the shorts. They buck off the shorts and then they take it back. So it's a constant tug of war between long and short, and whoever has the most on their side loses the battle. So it's counterintuitive. The majority lose in trading. So the majority, where's the majority of the liquidity is where we are aiming to see, and the minority do not end up being attacked. It's the majority which wins the tug of war and loses the trade. So as we look here, there is 22 billion at 30,300, 13 billion 30,600, 26 billion 30,900. So in this immediate zone, there's just more up here than down here from the intention that has been pushed up to this region. Now, just as fast as they dropped it down to here, they could do the same and do a devil finger down to start tapping into this. So you cannot ignore that there's 27 billion here and 44 billion here and 36 billion here and 55 billion and 64 billion and 59 billion here. So this entire region is about, 150 billion dollars all the way down to 25K. That's just sitting there right for the taking and getting thicker by the minute. As you can see here, this previous 13 is now up to 32 billion. So this 26.7 region only had half that about 7 days ago. So within the course of a week, it has doubled in value down there at 26.7. So do they come down and attack that? What did they get down here by spiking off of this? They got some 10 billion in liquidity and then came back up. Are they attempting to double top here at some stage is the question. So the interesting thing to note is that the path to 34K is also getting paved, which we've been talking about over the last few weeks, which was not there before. So you had back in March nothing there, and now you're starting to see this double digits 50 billion plus on the path to 34K, and this region of 30K also starting to get something double digits in value. So the path to go up here is not null and void. It is possible. So it's possible to go up to 34K, and it's possible to go down to 22K in terms of previously, if you were talking about 34K back here, that didn't make any sense because there was no liquidity suggesting that move. Whereas now you do have that liquidity, even though you're around the same price tag of 29 and 28.5. So it's interesting to note, to say the least. So I don't need to use measured moves and everything. You use the liquidity. Does the liquidity suggest these things are possible is what I look at first and foremost before anything else. Now moving to the yearly time frame. The yearly time frame, everything zooms out and yellow becomes $200 billion. So you're not going to notice so much yellow in the charts. The 100 billion is in green. You'll notice more of this greenish aquamarine color. So we got all these double digits down below. 100 billion at 22.4, 72 billion 25.6. And you got that path nicely starting to pave to the upside here to 34.8, that 84 billion at 34.8, and getting that 100 billion at 33.2. So you got 39 billion at 30,008, 24 billion 31.2, 52 billion 31.6. So this is where you start to see how they like to retrace and leave some on the table. So unbelievably, we were talking about this 25.6 region back here in February. Okay, so let's zoom back to February. February had $155 billion left up here in short liquidity, and they didn't take it. They came down into this and scared out some of the longs. They valued that idea more, and then with the Silicon Valley Bank failure, they shot up within a few days and took it all back. So just with the idea of this distance and not having anything here doesn't necessarily mean they don't come back with a fury to take it. And we were talking about them coming to take this. We didn't expect it to be with such a fury, but they did. That was a 618 bounce down here. And the same thing could apply inversely. So if you're up here and you come down into these regions, that inverse stab to the downside could occur at any given moment. So you always have to think about these imbalances and where they lie in the charts. So the ambiguity here on both of these sides is present. If we go to the 6 and 3 month, this is where I can get that colorful value distinction. And yeah, just in this time frame alone suggests that some sort of hit to these regions would be a wise move to think about, just in terms of a similar story. We went up to go down to go up. So we went down to go up to go down a lot. So you go down a little, it's kind of almost fractal in nature. We went down a little bit, went up a little bit, and then went down a lot to go up a lot. So we went down a little bit to go up a little bit, to go down a lot, to get into some of these regions and retrace. Let's go into the Fibonacci now. I think we have a clear picture. So looking at that 618 rejection, we are currently coming above that right now and trying to hit this daily time frame. So let's go into our regularly fib scheduled programs and take a look. So this was the bearish projection that I put out yesterday, and we did maintain that for that, but we didn't go down to any of these regions just yet. So until you can close beneath this 29175 region, this bearish projection is not yet valid. And how do you get that projection? Well, you take the retrace tool, the trend-based fib extension tool, and you go 3 clicks. 1 is the impulse, in this case to the downside. 2 is the retrace back up, and you have these settings which you can go back and copy if you like. I use the 236 for the entry. You get the 786 wall possible bounce zone, and then a 65706 institutional kind of permission granted to continue or not, and the 11382 take profit region, and the 1618 Hail Mary, and the 2 Hail Mary as well. So that's where the math was set in stone for this. You have the impulse to the downside on the daily time frame here, and then the retrace. So where does currently our retrace was up to this region, so the short is not valid until the 29175 region is broken. So if we cannot break that region, then this bearish projection is null and void. And so once again, how do you do that on the other side? Well, I often like to do them on both sides so you don't get biased to one or the other. So let's try to see where that retrace would be. So we retraced a little bit lower than we would have liked. So let's go back to here really quick. This is technically consolidation, so I wouldn't really consider that the impulse. So doing like a bullish projection doesn't quite happen just yet. So we'll do it on a lower time frame and see if we can get something, glean something out of that. I mean, technically what you would do is this, alright? So the only other place that makes sense for a bullish idea would be from here to here. And that probably already played out. So you got that 236 entry, and you got up to the 1 here. So this region back on the 12-hour chart, this rise and retrace idea contained with the 236 entry here on Sunday, April 9th, your idea to go higher, and we went back up into that to the T. And so that bullish trend-based fib, this impulse retrace idea with the 236 entry, had you at hello all the way up to the 1382 region with that rejection back down. So this has already played out, so we're waiting for like another type of impulse retrace with the higher low idea. This is not a higher low than here, so I cannot use that for this pattern. I can only use the bearish one. So if we do return to these previous bullish zones, we were fighting around in the 65706 786 region, and it also coincides with these 706 rejection of the retrace here. But it's just interesting to note, if you go find this impulse and this retrace here, the 236 was valid for that entry, and the 1382 was the valid take profit. So that's why I like using these trend-based fib extension tools to capture things into the future. So if we do come back into these regions, these will be noteworthy. So I'll just leave that up for now. I can remove this because it already played out. I just don't like too many lines on the charts, so there's just no volume present right now. These candles are bled of color because there's just not some intention there. This blue and red is like a stopping volume candle, and we're drifting up to do what exactly is the question. I'm not really buying the move personally. Alright, so let's go to the indicators, shall we? Let's throw on our heads up display. Where is that? Boom. There we go. Boom, boom. So what is this indicator? Well, the link is in the description, momentummaster.info for more. Scroll down to features, toggle everything at your leisure to see what it looks like in its full glory, or look at each component and read about what the trend cloud is, or the baselines, for example, or what is the money flow on Momentum Master B, and what is the stochastic array, these little symbols that alert your phone with dynamic alerts. What is a dynamic alert? Oh, interesting. So you can just read about that at your leisure. Link in the description. So down here we were talking about the double bottom idea since the weekend. And why did we think about that? Well, we had maintained this crossover event. So what are the crossovers? These baselines cross over with the leading moving average formula, and then when they cross up or down, the cross up here had you at hello as long as you maintain that baseline, which we did on that liquidity grab, to the upside. So until this crosses down, the short is technically not valid in this leading moving average formula, but if you go to lower time frames, you start to see it manifest first and foremost there, similar to we had the cross down event, and it maintained the entire time until the short played out, even though there would have been massive drawdown. And here you have this cross up, and we went up here, and we're reaching one baseline above the price action now. When the baseline gets above the price action, it starts to express that fatigue on the upside move, similar to here, and when it gets beneath the price and scoops it up, it starts to express that fatigue to the downside, which expresses it to go the other way. And so the baselines are kind of your first sign of reversal, as noted on the website. Sorry, I'm not liking all these lines here. I'm going to remove this really quick. Okay, so so the lower the time frame you go, the more crosses you'll have, and so this is ultimately a scalper's dream, and we have a lot of people in the Discord having fun on micro time frames using this strategy. Shout out to everyone doing that and getting funded using that as well. So you had this we talked about this crossover on the previous live stream just before we went offline, and then just after that, boom, it dropped like a rock. So this is what I mean by these are leading. It happened on the live stream before this candle occurred. So you had this crossover event while I was sleeping last night, and you would have had that upside momentum if you were so inclined, as you held that cloud. So holding the cloud with the crossover event, these confluence on confluence structures are what you look for. You break through the cloud is thinning, you have this confirmation event of the baseline, comes back, retests the thinning cloud, and boom, you were gone. And yeah, that's kind of how you view it. So as we're seeing this baseline fatigue possible, you look for this cross down event similar to what we saw up here. And if you get the cross down event, normally in Asia, so let me turn on this. This is a nice free indicator by Tradinator called ICT Kill Zones. It will give you the open sessions, and it will only turn on when you go below the 15-minute time frame. So it gives you when New York opens and London closes, and you can start to notice confluence of Asia, London, New York. Now we're in the Asian range. Asia likes to pump it after and then fade it after that. So they do the fake pump, Aru, and then dump it. So if you see a pump in Asia, chances are they're going to fade it into London, so you can take that. There are exceptions to this rule, but you can go back and back test using this and see what Asia does. They pump it and then they fade it. And so this pump before the fade to London handoff is what you look at, how these Asia to London to New York narratives are built, and how does one complement or contradict the next, and what does Asia do. So Asia pumped it up to pass it off to London in a neutral negative state, and they went sideways to hand off to London at the lows, and New York sent it up. So what are they going to do here for Asia here? We're not seeing any volume step into the charts just yet. You're getting that, you had that previous cross down on the 15 of the baseline. You're also at the outskirts of the Keltner channel. Keltner channels are ATR based Bollinger Bands, so they're dynamic support and resistance. When you get above them, chances are you're coming back into this ATR band. And conversely, if you get below the band here, you're coming back into the band. So these things are kind of interesting ideas to look at for confluence when you see these fatigue points on the outskirts. And so is this the place to long or short? Not really. You'd wait for this to come beneath the band in some way, shape, or form. I entered mine yesterday over here. It was like on the fade here, and I was up $200, and I've just been holding on to the trade, considering whether to DCA or not. I'm looking for that bigger pullback personally, but I don't want to necessarily install a narrative in your mind. So let's look at that 5-minute chart. So we're going to go do our thing from the daily time frame. So we had a 3-day reset just yesterday. So we're going to look at that and then work our way down from the 3-day time frame. All right. So starting from the 3-day, the 3-day time frame closed just an hour ago, and we saw that we're at the outskirts of the Keltner channel on the 3-day. We've been kind of meandering around. We did have a cross down confirmation event here on April 16th, Sunday, and we saw a massive dump. And this blue candle suggests a stopping volume candle for this red candle. It's coming back to stop out some of the shorts here. And are we going to see a continuation down into this region of the Keltner channel into the cloud on the 3-day? Okay, so we did a previous thing like that where we came to the cloud, kissed it, and went further. Are we going to come down into the cloud and kiss it and go further? The angle at which the cloud is, the angle at which the cloud is curving here is interesting to note. You do have this kind of curving nature to it that suggests something stalling in some nature. So are we going to come back down and kiss this cloud and try to get some refuel off some order blocks down here? It would go into this candle as well. You have this currently curving up with that stopping volume candle over the 6 days here. Williams is overbought too, but with that alarming event here, we're still beneath the baseline. So the idea of this retrace on the 3-day is not necessarily in effect. This could be one of those fake outs before they open the trap door and release some of that momentum pent up in this purple here and drop it down some more. So just because you're low doesn't mean immediately get in. That last leg of emptying the door and letting the momentum out could be a massive one, to say the least, especially when the Williams is this high. I don't know how backtestably true that is on the 3-day, although you did have a high Williams here last year, same time, March last year. So you had that high Williams and came down, and it was massive. So every time the Williams is high, it's something to be noteworthy about. Williams was high, Williams was high, and Williams is high. So are we going to see much more upside? That is the question. We are at resistance on the daily with these dotted lines. The 5-day closes in 2 days, if I'm not mistaken. So same as the 3-day. So the 3-day and the 5-day coincide in the next 3-day candle, and we're already seeing some downward momentum on the 5-day, and we have the cross down confirmation / rejection of, we haven't quite gotten to that 200 weighted moving average yet, but the we're at the cusp of this crossing. So if this candle gives back something, you're most likely going to see an alarm appear here. And the last alarming 5-day was back here. Okay, so when the Williams gets high with the 5-day alarm on the Williams, you don't want to fight that necessarily. If you're stuck in the past and you're only looking at bullish times, maybe you'll be talking about these pinning ideas here, but times have changed and we're not as bright as we used to be in terms of a species and culture and all that, but that's another discussion for another time, despite banks failing and whatnot. Whoa, did I just combine? I think I just combined some indicators. Hold up. There we go. I put A into B for some reason. All right, so that is the 5-day, also baselines above the price, leading moving average idea, telling you could be coming back here, fatigue on the 5-day time frame. Let's look at the weekly. The weekly has this nice curvature and thinning. We had that previous KISS 618 bounce off the cloud, as it likes to do, and we've been seeing this resistance at the adaptive and the weighted moving average, which is interesting to note. We previously saw that on the daily time frame and we broke through it. Here we attempted to break through for 1 week, got rejected, hard reject. We're coming back to them. As it stands currently, we got rejected off the weighted moving average, and the adaptive is holding with a little bit of yellow as it's starting to trend up again. But we are at the outskirts of the Keltner channel and could realistically come back into this to get some more fuel for the upside move on the weekly. The weekly stochastic is also coming down, as is the Williams being high here. One thing interesting to note is the money flow is beneath the RSI, which tends to bring it back up into the RSI. If it gets on a downward path, though, it could keep going down further. Interesting. So let's go into the 22-hour. This was the 22-hour, which caused us not to short that support area, was because the 22-hour was low, and it was the 12 and the 22 versus the lower time frames, and the higher time frame was 1. So I would not have battled that 22-hour personally. So that's why we had this hidden bullish divergence here on the money flow. Once again, the money flow going beneath the RSI gives you that leading idea that the money is coming back to the RSI. Currently, the money flow is above the RSI on the 22-hour time frame, and you are overbought. Okay, so does this mean that the 22 hours is going to reset on you? At least give back some of that to bring this money flow back to the RSI. Could be the case. The Williams is still good for some upside momentum if it does want to pin it. The cloud, which we reclaimed, still purple, starting to shift a little bit here on the 22-hour. Could we come back into the cloud beneath the 236 and attempt to show support here? I'm going to be looking at that 236 drop down to these regions personally, but let's look at the 12-hour. So the 12-hour cloud also curving down. We're getting a slight curve towards going in this manner, but still thick in purple. So if this doesn't curve naturally, this is a volume weighted cloud, which is why I said I don't like the volume here. We're drifting up, but there's no volume to support the move. You see these gray candles bled of color, there's no volume in them. So we're going up for what exactly? Basically eating the short liquidity before it dropped, maybe. That's at least why I'm not super pressed about this being negative right now. And yeah, the 12-hour time frame is overbought. So now you have the 12 and the 22 working against you in the opposite direction. So whatever the lower time frames are saying is counter to the 12 and the 22 going higher. Similar to when they were saying they were done here, they are now saying they are done here for going higher. Does that mean that's the case entirely? You do have more room on the Williams to go higher. Let's go to the 6th. Let's see how y'all are doing real quick. This is awesome. Oh, thanks. Thank you. All right, so the bearish divergence here that it was on the RSI and the money flow was one of the other things you could have taken for a short idea. Actually, it's just the money flow, not the RSI, but the RSI actually also had bearish divergence. I don't know why that didn't play out. Maybe it's the candle number look back. But yeah, you had a lower high on the 6 hour and a higher high on the money flow. So that was bearish divergence, which came back with the fury. So the interesting thing to note here is the cloud is shifting, similar to what we were just looking at on the higher time frame potential, is this curvature. And so it's starting to get thin here. So as it's thinning, it would ideally, if it comes back and retests this as it thins, it starts to get that nice kiss to the cloud. You see this? It thinned out and it came back and it kissed it and found support off of that and bounced up. Now there are times this one was not as clean because it bounced around for a little bit on this time frame before coming out of here, but there are times where it kisses it to a T and comes back cleanly. So let's go to that time it happened. Everything's fractal in nature, so it was basically here on the daily. So we'll just go to the daily real quick to show you that. We showed you that just a minute ago, but I just want to refresh your memory. So was it the daily time frame? No, it was the 12 hour. Sorry, I'm drawing a blank. I thought I saw it on the 618 here, but anyway, so you look for the cloud thinning idea, which is starting to form here, and the shift of the volume. So there is a previous selling volume, which is in purple, and that's starting to shift as the rise comes here. So when the thin comes in, a direction is in. So if you go to the trend cloud here and it says the last line, thin clouds represent weakness or consolidation points. Keep in mind when the cloud thins, a potential expansion or reversal is in. So that expansion can be to the downside too. It doesn't mean that the expansion leads to upside on a thinning purple cloud. It just means weakness is in. So you have this thinning cloud, and then we started to go back up at that point. So this is why you would not look for a long while the cloud is thick here. You'd wait for it to thin and then come back to kiss that cloud. So the 6 hour cloud is interesting to note here as different features come into prominence. You were getting previous rejection at these ATR regions, and the second baseline is starting to appear above the candle as we're getting this indecision doji. So if we start to reject down out of this doji, then this starts to point down and lead you to the idea of it fading, similar to this cross up event leading to the idea of it going up. Okay, so that is interesting. So we'll keep that in mind. 6 hour cloud kiss potential could be in. Let's go to this. You are getting this kind of bounce off the money flow and the RSI here on the stochastic RSI, and the Williams is still not yet in the red for being overbought. It could go up a little bit higher. Williams is a interesting thing to look at because it is a reflection of price action. So it's a probability wave, momentum wave on price action, and it gives you a negative value, so it goes in this domain here in the negative, but the overbought goes close to 0 and oversold goes into negative 100. So you can see patterns and stuff. Double tops on the Williams with the alarm lead to the downside, and you would get a double tap on price. So The Williams does have patterns within it, so you can see a potential M formation here. And you can also, I think Rainier was pointing out bearish divergence and bullish divergence being a thing on the Williams. I haven't back tested it enough to hold it true, but you can notice if you're making higher lows here and a lower low here on the Williams, that could give you those leading ideas for bullish divergence appearing in the charts. Something to note to anyone with Momentum Master V to backtest. I have yet to find the time to do it properly. I do have a divergence formula I should throw on there to let people use. One thing to note as we step into the 4-hour time frame is the money flow being extremely overbought and above the RSI, and we're kind of meandering at the 50 level here, showing an ambiguity in where it wants to go. So this 4-hour time frame I'm not liking the looks of in terms of being double top status, as well on the Williams is being red, and that's why you're getting these blue color weighted lines telling you overbought. So it is getting overbought here on multiple time frames, on the 4-hour, and you're getting that baseline already showing above the candle here, showing a sign of fatigue on that leading moving average formula. It's failing that baseline test to stay above it. So here you had this thing, they started to fade, and we always maintained that thick baseline throughout the journey. So if we fail this fat baseline here, then you can expect more downside down to this cloud kiss and below, maybe these fib levels, and that short idea that I have percolating could be in play. And we're at the outskirts of the Keltner channel. Once again, confluence on confluence. I don't go long when we're at the top of a Keltner channel. That's why I'm short right now. Just me personally. While other people might be looking at patterns and stuff, I look at different confluences that tend to play out. All right, so here's one thing to note is that we're seeing a large sell-off volume here on the hourly, despite going up. And this is why I said the volume and the drifting of price upwards just doesn't have me sold on a long idea personally, because we're seeing this volume stepping out of the charts, not into the charts necessarily. We're getting these algorithmic pushes on the price action to grab liquidity, but for the most part the volume is stepping out, and you're getting this Williams cross down alarming event here, and the fading of the baselines here as well, similar to back here. And this could have you lower. This one, when we were back here, the hourly was, the value on the hourly was, let's just go see, the value on the hourly was sub 40. So it was the Williams that had you alarmed here on our last live stream. The Williams was giving you that alarming thing, and you had the cross down event here. This is the last time we streamed. We stopped about here, and your stochastic was not necessarily overbought. It was coming down on you, but the Williams had you at hello because you were kind of getting that alarm. So you're getting that alarm event potential again with the Williams. And as Asia likes to do, they pump it before they dump it. So are they going to start to dump it and hand off to London? The cloud volume here is expressing fatigue to the upside in terms of continuing to the upside. It looks like it's going to curve down here and maybe go to the kiss these AMAs and the support at 28,489 perhaps. Who knows? And if you go to the 15 minute attempting to express itself, but not really going anywhere but sideways here as you're getting the money step in to the charts. No notable volume just yet, and you're beneath the cloud here, and you're bearishly retesting perhaps to continue down further to the bottom of the Keltner channel and below on the 15 minute, just not bringing the fire. You had that cross down event here back at 5 a.m. my time, and you saw the baselines gently drift you like in Saving Private Ryan, like shh, 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 to the downside as he sticks the knife in deeper. And yeah, that's the 15 minute time frame. Bearish retest, continuation down to here perhaps. But we're holding the ATR as it stands currently, so the trend is obviously up. until it's not, and then that's your ATR level. So the cool thing about Momentum Master is it has all these dynamic support and resistance that have been back tested for you. So this ATR holding is showing you that if you're long, you're not necessarily out of that idea just yet, and until that breaks. So it gives you those things. Even if you don't know about Fibonacci, you still have things which are relatively nearby those Fibonacci levels anyway. So you don't need to be an expert in fibs to use dynamic support and resistance tools. And so these baselines and these adaptive moving average will coincide, and you'll get that kiss off of the adaptive here. Okay, so what does it all mean? What does it all mean? Well, we're getting bearish divergence on the money flow here, continually on this money flow on the 5-minute. And yeah, Asia doesn't normally bring the fury to the upside. This is Friday, run for profit Friday. So where is the profit? That's the key question. Where is the direction for profit? Well, as we illustrated on the monthly time frame, there is a little bit up above here at 31K, and if we just zoom into the immediate, there's more. There's a little bit, 2 billion down at 29.1, and a few 100K over here in the same distance. So coming down to 29.1 is not out of the realm of possibility. Does it justify coming down below 29 to 28 when there's these guys up above? That's why you have to step to the higher time frames, and then we'll just go direct to the 6 to remind you. And it's key not to get sold on one narrative over another, but it's nice to juxtapose and keep in mind these pools to 34K. Me personally, I'm not seeing the pool to 34K just being caked up as good just yet. I see this path to 25K and 22K being paved up quite nicely as of this current moment in time, and I'm not seeing the volume step into the charts necessarily. So to me personally, I'm seeing that this eating into the long liquidity on the 1 minute of imbalance of 11 billion, and this higher time frame 25K region being also thick all the way down to 19.4 and below. Just coming down into this would be the play, and then everyone always talks about sell in May and go away. So I don't know. It's an interesting conundrum, to say the least. Yesterday's short played out quite nicely. This one, is it going to play out well too? I don't know. So that's about it. We'll take a few questions and then we will bid you adieu. I have to go drop off my car from work and pick up my mom from the airport. She's coming from America to Japan to visit and meet her grandson, who she's never met in person because of COVID. So it'll be nice to see her again for the first time in 3 years or so. So let's see what's up. Nix, yeah, thank you Nix for joining us, and hopefully you can catch some smooth moves to the up or downside. We don't have a bias here. We are just interested in momentum and profit. Ooh, and it looks like it's going down a little bit, so we're not nearly as in drawdown. But I'm willing to give it back because I had 148 I took on that short and 331 the day before that. So it's all good. It's all good. You got to be able to sit through some. You can't always snipe the exact entries, although Jason Casper is pretty good at it. So let's ask some questions, shall we? Any questions at all? The 6 Juanita, yes. How you doing, Wendy? Good? Hopefully all is well in Wendizzle's world. So yeah, as it stands right now with this structure, you got a low, an impulse to the downside, and a lower high. And so this impulse retrace gives you this math for the 236. So until this 236 is invalidated, as in it comes down beneath it and closes beneath that, the short is not in play. But for me personally, I'm looking for these attacks to the 25K region based on the liquidity here on the 3 and 6 month time frames. It's just been building for so long that the internal liquidity suggests that we attack that region. You just got 100 billion there, and if I go up to here, I don't see 100 billion in the same distance. It's just not as thick. So I say go to the 25k region and attack that personally. And it would knock out a lot of traders. Let's go look at who it would knock out, okay? I'll go into that too. Also, if you're new to Momentum Master, don't feel the need to have everything on all the time. Just like my heads-up display, you can turn it off. Particularly, I turn it off when I'm doing fibs and all that stuff because these get in the way of my eyes. So don't feel the need to have everything on all the time. So this region here, if we extended it out, it would basically stop out all these guys. So the guys that entered trades from March 18th that are in slight profit now, hoping for more upside, an attack down to here would stop all of them out. All of the shorts, and this is what you call sell side liquidity. The buy side liquidity was already knocked out up here. So you already knocked out the buy side. So is it time to hit the sell side? I don't know. I don't know. Lucy, you got some explaining to do. So we are getting the cross up event, but until it closes, these things don't really mean anything. It just gives you that insight until it closes. And here you did have a false dud. You're in resistance too. Like you wouldn't really want to take that into resistance, necessarily speaking. Here you could possibly take it into resistance if it closes in that state. But it would require the volume to step up to the plate to do so. So we got that. We don't have the fatigue just yet. So I'm gonna just try to take a slight, this time if it goes down, I'm gonna try to see. The 12 hour is still holding nicely. 6 hour. It's the 6 and the 4 where it starts to get ambiguous. Starting around here. Can it hold this baseline to continue higher? Is it going to come kiss this cloud? This is the question that arises. The 4 hour baseline beneath that. Is it going to close beneath that one? Coming back to the cloud, kissing the adaptive. These things happen again and again. And this kind of liquidity grab, just no volume. The volume bled out of the candles, just kind of expresses something. Alright, so let's see. Anything else? No? Alright. Well, ladies and gentlemen, that's my story and I'm sticking to it. Asia is low liquidity. Don't expect much, necessarily speaking. Although if and when Asia does decide to bring a pump, they generally bring it around lunchtime, my time. So around like 11, like in an hour and a half or so. So if you're looking for those pumparoos, then you might see a pumparoo in an hour or two. If that is the narrative that is happening. So for me personally, I am ready for that pump if it does come, and I'm looking more for the other side of the opposite of pump right now. And that Asian session. So we're now at the Hong Kong Open, has already happened. Hong Kong took it up a little bit, and then are we going to see it drop? There's just nothing that really stepped up to the plate just yet to excite me either way. Alright, ladies and gentlemen, I must go drop off this car and get ready to pick up my mother, so thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same and try to bring the fire, precision, and accuracy required to capture your attention. And I hope you have a great day, and I'll catch you on the flip.